Welcome back to Investing Talk Podcast.
Today we're focusing on Enphase Energy and its upcoming earnings to watch.
This is definitely a big one. Before we get into what to look for, be sure to subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
All right, so let's break down the key things we'll be watching for in this report.
Yeah.
Based on what we've seen, we're looking at the Q3 2025 results.
Right, for the quarter ending September 30th.
Exactly. The report's expected around October 28th, give or take, but honestly, the date's less critical than, well, just how low the expectations seem to have sunk.
Yeah, looking at those consensus numbers, it really paints a picture. Analysts are calling for about $333 million in revenue, and non-GAAP EPS around $0.64. That revenue figure, the $333 million, I mean, that's a 12% drop year over year. That's pretty steep.
It is steep. It confirms what we started seeing hints of in Q2, that the slowdown isn't just continuing, it's accelerating into Q3.
And the earnings drop is even more dramatic, from $1.02 last year down to 64 cents expected now. Ouch.
Yeah, a big drop. And remember, management themselves kind of set this expectation back in July. Their guidance was for revenue between $325 million and $345 million.
So analysts are right smack in the middle of that range.
Pretty much. Although, there's always the whisper number floating around. Some traders seem to be hoping for a little bit more in the earnings, maybe closer to Zyre and 68 cents, like a tiny beat.
Hoping for a beat seems optimistic, maybe. Given the analyst sentiment we've seen these past few months, it's been intensely negative.
Oh, intensely is the word. The consensus rating actually fell to reduce.
Reduce? Wow.
Yeah, and the average price target took a nosedive down to $46.37. That's a big adjustment downwards.
It really is. And you see specific examples driving that, right?
Absolutely. Like Mizuho downgraded them, and then Goldman Sachs, they didn't just downgrade, they reaffirmed a sell rating and just slashed their target. Cut it from $77 all the way down to $32.
$32. That's signaling a major lack of faith in the growth story.
Exactly. It feels like a fundamental re-rating. The market's basically saying, we don't believe in that high growth multiple anymore.
Okay, but let's not forget, they did beat expectations just last quarter in Q2.
That's true, yeah.
EPS came in at 69 cents versus the $1.62 expected, and revenue grew almost 20% year over year back then.
They delivered the beat, technically, but the market reaction was, well, lukewarm at best, wasn't it?
It really was. Like, it didn't even matter.
Which just shows you the level of skepticism that's already baked in. It led to this valuation compression we're seeing. Investors are bracing for more pain ahead.
And then you add in the stock's volatility.
Right, that high beta. It's 1.56. So for you listening, that means any swing in the broader market gets amplified for Enphase Energy. Big time, good or bad.
So it's naturally a jumpy stock.
Very much so. Okay, so moving past those headline numbers.
Yep.
Because the real story often lies deeper, right, in the operational stuff.
Exactly. Where does it get really interesting? What are the key metrics here?
I'd say two things stand out. Gross margin and microinverter shipments. Those are the ones to watch closely.
Okay, let's start with margins.
So the company guided for non-GAAP gross margin between 40% and 41% for Q3. Now, if they come in below that...
That's a problem. Signals they might be cutting prices, losing pricing power.
Precisely. It suggests they're struggling to move product without discounting in this tougher market. But if they hit or beat that 41%...
then that shows resilience, that they're holding their own despite the headwinds.
Exactly. It speaks volumes about their competitive edge and, the actual health of their profitability.
Makes sense. And the second one, microinverter shipments.
Yeah, so they shipped about 3.87 million units back in Q2. The Q3 number is really a direct read on demand.
A forward indicator.
You got it. Especially given all the talk about softness in the U.S. residential market, if that shipment number drops off a cliff, it basically confirms the worst fears.
But if it holds steady, or maybe even surprises a little,
that would be a definite positive sign, suggesting maybe things aren't quite as bad as feared, or perhaps their other initiatives are starting to compensate.
Okay. Before we get to those initiatives, maybe a quick check on their financial health. Any worries there?
Actually, no, not really on the short-term liquidity front. Their balance sheet looks pretty solid for now. Quick ratio is 1.82. Current ratio is 1.97.
Can you quickly unpack what that means for us? A 1.82 quick ratio.
Sure. It's basically a measure of their ability to cover immediate debts with their most liquid assets. Think cash, receivables. A number close to 2, like they have, means they've got almost double the liquid assets needed to cover short-term liabilities.
So they can pay their bills, no problem. The issue isn't survival, it's growth and demand.
Exactly. The focus is squarely on navigating this demand slowdown, not on, keeping the lights on next month.
All right, so let's talk about that demand picture, the macro environment.
Yeah.
It's still tough, right? Particularly in the U.S.
Yeah, the U.S. residential solar market is undeniably soft. We saw installations down about 8% year over year in Q3.
And interest rates aren't helping.
Not at all. High rates are a major headwind. Makes financing those big rooftop solar systems more expensive for homeowners, so it naturally dampens demand.
But the company isn't just sitting there taking it. You mentioned initiatives.
Right. They've been actively making moves. 2 key things happened during the quarter. First, they launched that new IQ8P microinverter higher power.
Okay.
And second, they announced some pretty significant residential battery partnerships over in Europe.
Ah, so pivoting internationally
Yeah.
and pushing the battery storage side?
That seems to be the strategy. Look for growth in Europe, lean into the storage solutions, basically try to counterbalance the slowdown in North America. It's a necessary pivot.
Seems like analysts have factored some of this in, though. You mentioned revenue estimates have been falling.
They have. Consensus for Q3 revenue is down about 10% just in the last 3 months. So Wall Street has definitely lowered the bar quite a bit, pricing in a lot of this weakness already.
Okay, so expectations are low. What about the stock itself? How's it set up technically heading into the report?
Well, it's been stuck in a bit of a range lately, mostly between, say, $104 and $124 over the past month or so. There seems to be some decent support around the 102.2 level.
But given the high beta you mentioned and earnings coming up, the market's expecting fireworks.
Oh, absolutely. You can see it clearly in the options market. Implied volatility, or a V, is sitting way up there at 77%.
77%? Wow. So what does that translate to in terms of expected move?
Based on current options pricing, the market is bracing for about a plus or minus 9.5% move in the stock during earnings week. That's roughly $10.30 per share, either way.
So a potentially huge swing that requires some caution.
Definitely requires caution, and you can see that caution reflected in how the options are priced, too. There's what we call an elevated put-call skew. Meaning puts the options contracts that bet on the price going down are relatively expensive compared to calls, which bet on the price going up.
So traders are paying a premium for downside protection.
Exactly that. It signals nervousness. People are actively buying insurance against a potential sharp drop. They're worried.
Makes sense. Now, looking beyond this immediate earnings report,
Mm-hmm.
are there other things on the horizon that could impact the stock?
Yeah, Q3 earnings is just the first domino. There are a couple of other things to keep an eye on. Around mid-November, you often get major ETF and index rebalancing.
Which can force big institutional buys or sells, depending on how the stock fits the index rules.
Right. And then in December, we get the big wave of institutional 13F filings. That's when we'll see how the large funds actually position themselves after digesting these Q3 results and guidance.
So, more clarity on institutional sentiment then. What about whispers, rumors, anything speculative bubbling up?
Always, especially when a stock gets beaten down like this. There's ongoing speculation about a potential strategic partnership, maybe with a big utility company or perhaps a smart home tech player. That could really open up new channels.
And the M&A chatter never really goes away, does it?
Not when valuations get compressed. There are always whispers that maybe a larger energy company or even private equity might see Enphase Energy as a bargain target right now. The lower the stock goes, the louder those whispers tend to get.
Interesting. Any product rumors?
Yeah, there's some industry buzz suggesting they might unveil a new, maybe next-generation microinverter before the end of the year. If they could pull off something truly innovative there, boosting efficiency, that would be a big deal.
For demand and for those crucial margins we talked about.
Exactly. It could be a real catalyst if it happens.
Okay, so putting it all together,
Yep.
the low expectations, the analyst gloom, the company's pivot, the high volatility.
Yeah.
How do we frame the potential outcomes for this earnings report? You mentioned probabilities.
Right. Based on the analysis, we can sort of sketch out scenarios. The base case, we'd assign maybe a 60% probability to that.
And what does that look like?
It's kind of muted, either a small beat or a slight miss. Revenue maybe landing somewhere between $325 and $335 million. EPS between, say, $1.62 and 68 cents.
So basically meeting the already lowered expectations. How would the stock react?
Probably not dramatically, given how low the bar is. Maybe a move between minus 6% and plus 7% kind of reflects the existing uncertainty.
Okay, that's the most likely. What about the downside? The bear case? You put that at 20%. Why not higher with all the negative ratings?
That's a fair point. The 20% assumes analysts have already priced in the current known headwinds, like the U.S. residential softness. The bear case would really kick in if there's a new negative surprise.
I'm like, wait.
Maybe international sales totally flop, failing to offset the U.S., or, crucially, if those gross margins crumble much worse than expected, if revenue scrapes the low end, like $320 to $325 million, and margins are bad, then yeah, you could see a drop of maybe 9% to 15%.
Got it. So the negativity is priced in, unless there's a fresh shock. What about the bull case? Also 20%.
Also 20%. And this scenario hinges entirely on those strategic pivots really paying off now. We'd need to see unexpectedly strong performance in Europe, maybe the battery segment really pops, and crucially margins holding up or even expanding above that 41% guidance.
And the numbers for that?
You'd probably need revenue up in the $340 million to $350 million range. If that happens, you could see a pretty significant positive reaction, maybe plus 12% to plus 18%.
Okay, so summing it all up for the listener, where does the overall analysis lean heading into this report?
I'd say it leans neutral to maybe modestly bearish overall. The big factor is just the undeniable softness in the core U.S. market. And there's a real risk that even if Q3 is okay, management might have to guide down expectations for Q4 or beyond.
Even with the potential upside from Europe and batteries.
Right. Those are positive developments, but the weight of the U.S. market slowdown and the risk of future guidance cuts kind of keeps a lid on things for now.
So the guidance is really the key takeaway here.
It absolutely is. Look, the Q3 numbers themselves will move the stock tomorrow, no doubt. But the really critical piece of information, the thing that will shape how big investors position themselves for the next few months, maybe even into next year, that's the Q4 outlook and any commentary they give about the full year 2026.
That's where we find out if management buys into the pessimism or if they see a path forward.
Precisely. Does their forward guidance validate what those analysts are saying? Do they confirm this intense pessimism? Or do they signal confidence that the European expansion, the new products, the battery push, that these things can actually steer them through this solar slowdown and back to growth? That forward guidance is the real hinge point. It tells you whether management thinks the recovery is near or if, well, the solar winter is just getting started. That's what everyone will be watching.